Well, good afternoon, investors. Welcome to our end of August back to school. It is the first day of school for my grandsons as of yesterday. They did a half day yesterday and they went full time today, but it is kind of that change in the seasons. My name is Mark Robertson. I'm joined here by my dear colleague, Ken Kavula. Good afternoon, Ken.
Good afternoon, Mark. It's been 48 hours since we've seen each other.
That's right. More on that here in a second. We're also joined here by Matt Spielman. All three of us have spent some time in Michigan, so we know that that cover photo is South Haven and the sunset. Good afternoon, Matt.
Good afternoon, guys. I love it. Fall in Michigan's coming on. I love that time.
Yeah, it's coming. It was in the air this morning, so that is ahead of us. And so we are going to take a tiny look at some stocks to consider for tonight. We are going to talk a little bit about Ken has been beating a drum on what I'm going to call foundational selling, specifically with respect to the roundtable. So we'll get that kicked off here today, and then we will share a few random thoughts about our weekend in Atlanta. Ken and I once again solved 99% of the world's problems between here and Atlanta and back, but we didn't record anything or write anything down. So
I will tantalize the folks that are suffering from heat right now by telling people that when Natalie and I went to breakfast this morning, it was 52 degrees outside.
Wow. Yeah, we were playing tennis outdoor last night, and it was just a tiny bit chilly, and then we got a curtain of rain that came down and completely drenched us. So that also affects things. I'm going to start with just pointing out that I did drop Ken off in Grand Blanc, Michigan, on the return from Atlanta, and I figured, well, if Ken actually won the national lottery, he wouldn't be picking up his phone today. So
I'm here.
and I also figured that, when I did drop you off, Ken, you probably did pick up a ticket for me and Wendy. No?
Isn't that nice that the 842 million has a cash value of just about half? So
It is. Well, it's half. Federal and state taxes, it's going to be half at that level.
That's 842 million EBITDA.
Yeah, EBITDA.
Well, and I have since found out that this was probably in error, and just in case all of you out there are panicking and checking your news feeds, there was no winner last night. Nowhere in the country.
I don't even see $1 million winner in Michigan. I see Georgia and Texas, so you still could have got a ticket. I don't know where in Georgia.
All right. Well, hopefully Ken and Natalie will pick up a couple tickets for us when they're out running about. But yeah, we're here today, guys, because
if I'm running around with my wife, I'm not buying lottery tickets. I'll tell you that right now.
All right. Before we get started, no investment recommendations intended. This is entirely an educational demonstration. Make your own decisions. Do your own homework. If you want more information or if you want copies of the slides, our 2 email addresses are at the bottom of the page. Period.
1 second faster than your record, Mark. Okay.
All right, some highlights from the weekend. Okay, I'm going to need some rulings from the audience, perhaps, or just thinking out loud here. So we're in Knoxville. We're on our way back from Atlanta, and I suggested Punxsutawney. And to me, that's kind of on the way. The map is on the left there. I mean, could have swung up through Buffalo and London and made a little bit of a wrinkle.
We got almost the entire length of Lake Erie in between Punxsutawney and where we live. Okay.
Well, it would have added a little time to the drive, so okay, I'll let you go on this one, but we were in range. We were in range. And we also learned during our stay that, yeah, they are paying attention to Buc-ee's. Buc-ee's is all over Georgia, in and out of Georgia. And we were speculating about when they might go public, but then they couldn't get off this Chick-fil-A. And that's what they were really interested in watching for. And I think I would agree with them there. I think it would be interesting to watch a Chick-fil-A IPO if it ever did happen. And of course, our weekly Portillo's check-in with the relish and mustard, and there's a tiny bit of mustard on there, mostly ketchup, and we're down to $7. By the way, we bought it at 19 for the round table. So our cost basis is 19 in the round table. So maybe I'll switch to Portillo's for tonight, Ken, do some averaging down. And then, of course, we asked the question. We were there, so we're looking for a place to get a quick, inexpensive but delicious bite to eat. And we found out that we only had to go 30 miles, but then we also figured out that it wasn't open until, well, almost Thanksgiving or Christmas this year. So there you go. You're informed. Georgia does have a Portillo's. All right. Stuff going on this week. Of course, today's session, I'm told, and was it you, Matt, that mentioned it, that Kramer was all gaga over CVS Health?
Yeah, he rated it a buy. He called it the last man standing in drugstores, which I think is a little bit over dramatic for Walgreens, but they're not advancing anyway.
Well, that probably puts a damper on the stock price for a while if he liked it a lot.
Interesting trivia fact, Mark. My very first presentation at the national level was a panel discussion about whether you should buy CVS or Walgreens. We can bring it down to a line right now that says maybe neither, okay?
Yeah, and I advised my parents many years ago, maybe both. And that probably didn't work out too well. NVIDIA is on the slide because they do report earnings tomorrow, and that will be probably influential. Maybe a non-event, but you never know. Of course, every year we drag out the Doug Larson quote because after I left you, Ken, I-75 was a parking lot going south.
Well, you hit the traffic coming home from up north. I know you got the wrong direction for 40 miles. Yeah.
And of course, the answer to Ken's Palantir Elven trivia, I did look it up. I hope somebody else out there bothered to look it up. I found out that it's not actually a place, it's actually a language, although it is an obscure place. And then I do like that expression, Ken. Did you bother to check me on it?
Yes, I did. I know what it says, but we need to understand that this is a made-up language. This is a language complete with syntax and grammar rules, made up by the author of the Ring series, J.R.R. Tolkien, and there are certain people in certain groups out there that actually speak this to each other. You got to really geek it up to want to do that, but there we go. It's not a real language, and once more, Mark, he made up two languages, and this is the language that nobody in the Elven community uses in modern times. This is equivalent to Latin in the Elven community. It's a language used for historical references, but not in everyday conversation.
All right.
So
well,
I researched more than you ever thought I was going to do, didn't I?
Well, I'll brush up on my Klingon for the next Comic-Con, but
oh God!
Here we go. All right, here's where we're at market-wise, and yeah, I even blew up that enlarged that right end of the graph to show you that we are peaking above the line of reasonable expectations long term that we learned from the gentleman from the American Association. And yeah, everything's kind of coming back together at reasonable levels, pretty fairly valued, not as overvalued as you read about and hear about on CNBC. And the one thing I think I would point out, Ken, is just in very general, it's not unusual for that green bar, which is a quarterly representation of the value of the stock market according to the value line average. It's not uncommon for it to peak above that red line.
Absolutely. Check out the graph all the way back up to 1999 right there. There's many times when those bars are peaking above the red line.
And when it peaked above way more than usual in 2021 and into 2022, that was an unusual time. You also note it was among the lower return forecasts for the last 3 decades.
I think it's kind of disheartening, Mark, to listen to the people talk on the different business shows and to characterize the entire market basically by looking at the top performing 5 to 10 stocks in the market. And whatever they tend to do is what they say the entire market's doing, and we know differently. So you know, it's okay if you're going to just own those 5 to 10 stocks and ride the roller coaster, but we know that there's still very, very interesting, lucrative stocks to invest in that don't have the same names as the 5 or 10 that are being talked about all the time.
Yep, and mentioned at the bottom of the page there. So for right now, the takeaway is the average stock out there is running at about 8 or 9% for the return forecast, the long-term return forecast. So we would obviously be searching for something in that 13, 14, 15 range to have an advantage to the general market. All right.
It is interesting to me, Mark, that for the first time, one of the laggards in that magnificent group of stocks has hit an all-time high again, and that was Google yesterday, hit an all-time high. That's the first time in probably anywhere from 5 to 7 months that it's gone along with the rest of the market and actually moved out in front with breaking its own all-time record. So maybe people have finally decided that if in fact Alphabet is broken up, it might not be such a bad thing for that to happen. You know, maybe the parts are worth more than the whole right now.
Yeah, and I would cite our session that we did on General Electric is where that can work out in that way. All right, one of your pet peeves, Ken, go ahead and bolster our understanding.
I think it's important in our community that we get the word out about the fact that our goal for an investment club, which is you know, average of 15% growth year in, year out, which in more simple terms says beat the market by 5 points year in, year out. I think we need to get the word out to our clubs and to each other that that's an extremely aggressive goal. So aggressive, in fact, that I think it demoralizes a lot of groups, a lot of individuals when they can only beat the market by 3 or 4 points. They didn't hit that +5, and therefore they're not doing as well as they should be doing. You have more than 650 funds in the database, and only 20 of them are able to beat the market by 5 points or better over a significant amount of time. And to be honest, one of the 20 has only been around since January 2024, so it's not exactly doing it over a long period of time. In fact, 2 of them come from 2024. So there's 18 long-term holdings that have beat the market like that. The goal is great, and it's always great to strive, I think, for something that you know it's going to be very difficult to achieve. But to become depressed or to beat yourself up when you only beat the market by 1 or 2 points, I think you should be celebrating anytime you can beat the market by any points. And that's the chip that I have on my shoulder about some of the commentary I see from our own community sometimes about how we're not doing as well as we should be doing. And folks, a lot of groups are doing much better than they should be doing, and they're doing it without the help of a professional advisor or without the help of a broker. So keep it up. Keep focusing on just beating the market. 5 is great, but just beat the market. That's all you have to do every year.
Yeah, and the one thing that I would add to all of that, I agree with all of that, and also point out that you hear this incessant damnation of institutional funds, and you know they commonly say 95 or 98% of them fail to beat the market, and that's mostly true. It implies that nobody ever does that, and that's not true. And I think what ails the general fund community is many of them, and this is an engineer talking, they're designed wrong. And I think our association and basically the modern investment club movement recognizes that you got to have that blend. that's cited in the box there. So I can show you, as you go down this page and you hit, fund number 200 or fund number 400, I guarantee you're going to be looking at something that is built with an average sales growth forecast of 5 or 7%. When our inspirations, George Nicholson, they basically said you need that at the bottom. So keep that in mind. Every time we put this up, that's why we circle it. The most successful funds and mutual funds have sufficient growth by design. So that's kind of, sorry if we're preaching, but boy, we ran into a couple instances of it this weekend that really kind of rocked us a bit.
And the pushback, Mark, to some of Nicholson's early numbers also needs to be shouted from the rooftops. Nicholson was known to talk about 11 to 12% as being sufficient to reach the goal that we're looking for in an investment club. And we're using a little bit higher number, and that we're using it for a very specific reason. Dividends, back when Nicholson was developing all of this theory and putting together all these guidelines for investing clubs, dividend yields at that point were routinely in the plus 5% or better area, so that you could buy dividend stocks and start out with a 5%, and then if your growth in sales was at 11 or 12, you could have a really good shot at hitting that plus 5 to the whole market. Today, dividend yields, if you get 2%, I think you're running around telling people you have a pretty good dividend payer in your portfolio.
Yes,
so
yes.
the decrease in dividends has really forced us to talk about growth that's a little bit stronger than maybe we would have talked about 25 years ago.
And it's out there. All right. We don't want to spend a lot of time on this, but we did get a number of questions fairly recently, and the announcement is that the government now owns, I'm doing air quotes, 10% of Intel, and not sure how I feel about it. I did ask the question, well, where's the money coming from? Am I sending in $100 check or what? The details are there thanks to Perplexity, another AI demonstration. Just ask the question, what's the source of funds? And it kind of lays it out. I'm really lukewarm on this. It seems like a direct move. The one thing that does the explanation does capture is that most of it's not even real news. Most of that was already committed in some shape or form. So it's not an additional 10% stake, but it's really just kind of telling you how they're going to do it. But and then I think this slide, actually, this is from Moby. It's the stock service we've been exploring a little bit just to see, do these guys know what they're doing? Could it have value to us? This was a poll that they ran recently, and I think it's a pretty good, and I would say there's very little bias. I mean, it's probably fairly balanced audience at Moby. And you can see that nearly half of the group worries or is concerned about it being corporate welfare or government overreach. And the one thing I'll say, and then I'm interested to see what you have to say, Ken, and Matt. I just remember a similar type question coming before the chairman and president of McDonald's years ago about some type of government, quote unquote, interference or whatever with McDonald's. And his answer was, so long as it's true for everybody and the playing field is level, my people and I will win. But when the playing field is tilted, I have a problem with that. And, what do you do if you're a competitor to Intel? How does that make you feel? Kind of the way I think about this, and really kind of nudges a question mark in my brain. What are your thoughts?
Well, I've been quite concerned about the reduction in the authority of our representative body, which is Congress. Congress didn't pass this money to give it to Intel. They passed this money that was the wrong statement. Congress did pass this money to give it to Intel, but they gave it to Intel with certain strings attached, and the strings were not involving ownership of shares. So I feel very uneasy, and I'm just, I guess, waiting for the next shoe to drop. Where are we going to go next? What is the government going to buy next? I was a little bit taken aback when I heard that NVIDIA had decided that they had to give the government a portion of their China receipts in order to do business with China. That doesn't seem quite American to me. And I'm seeing this kind of crop up in a lot of different places, and it bothers me at the moment. So at the moment, I don't know what I can do about it, but it bothers me.
Yeah, it's disquieting, discomforting for sure. Matt, any thoughts on your end? I mean, we want to avoid being political, but
Yeah, and we commented. I mean, before we started the show, right? The government has gotten into these things before in very specific ways. Following the 2008 financial crisis, they got into the auto business, they got into some financials, but always with a viewpoint of going out. So I share everything Ken says. It's confusing and worrying going in. My worry is there's also no specific procedure to get out. And so I think the unwinding of this, if this is not meant to be permanent in the sense of a sovereign wealth fund sort of way, is going to be just as hard to explain and understand in time as it's happening to get into it.
yeah, in fact, as we came on right before we hit the airwaves, there was an article released that posed the question: what happens if they sell 10% of Intel on a day, 14 months from now? What does that do to the company?
Yep.
10% block just literally getting flushed. That we all know what the answer to that question is. So,
Well, and God willing, we have elections in three plus years. What happens if we change administrations? So there's so many questions. So many questions.
You're getting close.
But even more so the NVIDIA thing, right? How does that NVIDIA agreement unwind? Do we just say enough and we're done, or is value looked to be extracted? Anyway.
It gets complicated, but it's worthy of concern.
Betsy Wills, who's going to be with us on some bull sessions going forward here as we begin to explore small companies, indicates that she's going to be talking about a company that has a significant investment from the Department of Defense or whatever that's going to be called in the future. So it's happening, and it's not just happening once or twice. It evidently is happening quite often.
All right. Well, Nick, he was giving us the HVAC rundown in the New York State area, and he provided some pictures, I suppose, from his commute that shows Claude. That's one of the artificial intelligence engines on the left there. By the way, they're the one we're using for the renovation at Manifest. So kind of nice to see Claude get such high praise. Then the one on the right's kind of interesting.
Is that a picture of Claude? I don't know,
Well, there's two pictures. There's a gentleman sitting on the box on the left, and then that's not a gentleman. No, I don't know. Could be. We'll get Nick to check that out with his next time he does a project. But Roy begging people to go to his webpage to look at his AI thing. So it's out there. Thank you, Nick. All right, so in Atlanta, I did a kind of an update of the session we did for the St. Louis chapter, just other stuff that we've noticed here fairly recently. And I just want to share one real quick case study that we shared with the Atlanta audience, just a nurture or nudge, or however you want to think about it. What I will tell you is I was on the phone or on a webcast, kind of a private webcast with just a few people, with a data scientist that is, of course, neck deep in this for a major corporation and a major consulting firm. And he kind of, no way to put it, knocked me out with some of the stuff he showed me. And what I think here is a fairly compelling case study. My whole overall attitude, and because before Ken reins me in, has not changed. I think of it as It's advice, but be careful. And Ken, I think you agree. Don't be afraid. Realize that it makes mistakes, but I do want to encourage, as we show you this, to imagine reasonably. Is that a fair assessment of how you would take this, Ken?
Absolutely. Just keep an open mind about what he can do, but also keep an open mind about what he can't.
I will tell you that he praised our efforts to understand prompts and learning to talk to what you should think of as a research assistant in your investment club, and think of it as somebody that you perhaps have to train. And I know Matt has actually experienced this firsthand. Sometimes you have to help them, learn how we think about a regression analysis or something like that. Once they learn pretty well. But yeah, think of it as a research assistant that you have to give some orientation to also. So the case study that I have is really well, it's very personal. By the way, this is from ChatGPT, and when you ask them to generate a caricature, they seem to be stuck in kind of one facial expression, as you can see here.
Lots of teeth.
It's really kind of fun. Oh, and by the way, when I made this cover slide, I asked ChatGPT to give me an image of the Atlanta skyline with robots, and what came back was a dark, dreary sky, basically very ominous, with a bunch of evil-looking robots. And I said, no, let's be playful, and that's what it gave me this one instead. But I assure you that my wife doesn't have an orange scarf. I don't have a red convertible unless I steal Ken's red Mustang. Yeah, so and there are no pine tree or palm trees in Michigan that I'm aware of, Ken. So anyhow, that's just pointing out that Wendy and I were out cruising around one night, and we drove by a house where quite literally the real estate agent was hammering the for sale sign in the front yard. Now that's not the property, but it's the point I'm trying to make. And what I did is I answered that question into, I think it was ChatGPT. Said, all right, I don't know the price. I haven't looked at the real estate agent's listing yet, but what is an estimate for that particular location in our hometown? I knew our daughter was actually thinking about moving to a different property, and found it quite interesting.
And just to be clear, Mark, that is not the address you put in, right?
No, that's a fake address, but we did live.
Yeah, folks, don't try to replicate this demonstration. Use your own address or somebody else's, okay?
Use your own address as an experiment and a way to play with this, because I did that for our house, and I did that for our daughter's current house just today, and got fairly decent results. But yeah, we lived on Golden Pond, but it wasn't 2025 in the Chicago area. All right, so what I got back from just entering that, let me start with the only input I gave it was the address. And I got back one quick response. And then I said, you know what? I would like to know what's going on in the area as far as sale price to list price. And then all I did was say, I want estimates for replacing all the flooring and painting all the rooms, resurfacing the swimming pool and the tennis court. And it took it less than 2 minutes and gave me a 14-page document. I am not exaggerating, where it gave me an estimated value for the house, along with a range of proposed estimates for making an offer on the house based on current market activities. And our son-in-law and daughter actually bought it in that range, in that recommended range. And then it proceeded to give me a 14-page document going room by room, making an estimate for what type of renovations or remodeling needed to be done to the house. Now, keep in mind, the only thing I've given at this point in time was the address. It went out and it got a real estate listing with pictures of the property and the various rooms, and it actually included an architectural diagram so you can see the size of the rooms, and it came back with this in less than 2 minutes. Okay. And in fact, I had made the mistake of saying that I needed to resurface the swimming pool. It came back and corrected me and said, Mark, I think you meant just the deck around the pool, because the pool, and Ken, I sent you that picture, it's gunite and it's ceramic and it's pristine. So it basically said, Mark, I think you're wrong. You want me to refinish the deck. Let me know if I'm wrong about that assumption. and it gave us a complete project estimate along with a day-to-day schedule.
That correction that the AI agent made, it Mark put a highlight over it. You can actually see it right there on the slide.
Yeah, so if you're talking about the swimming pool, that's a horse of a different color. So, and the other thing that's absolutely fascinating to me is every single estimate that was given, and there's probably 100 estimates, was within range. Now, maybe the ranges were too wide. I don't know. I don't work in that field. But every hard dollar estimate she got from a real person as they proceeded through this transaction fell within those ranges. So I find that to be absolutely fascinating. So she's got a full bill of material, broken down room by room, and a day-to-day schedule. And now she can actually go back in. Oh yeah, for the living room, I wanted this specific carpeting, this specific paint, and then it just tightens it up even better. But I want to make the point one more time, and then Ken go. The only input was the street address.
Mark, we're getting some of our audience wanting to know again, which AI engine was this that did this for you?
This one was ChatGPT.
Okay.
And I may have been using the premium. I switched back and forth, so I don't remember exactly which one. So it's I believe it's $10 a month. It might be $20 a month for the premium, just to give you a feel. So again, I offer this case study just to nudge your curiosity. And again, go out there, put your own address in and see what it tells you about your property. And, there are no guarantees. And again, it makes mistakes and we know all that stuff, but I found this to be a really fascinating, case study or demonstration that just piques my curiosity. He did a couple more with me on other subjects that were when we were online that Friday evening. We started with what should have been a 30-minute phone call. 3 hours later, we're going through some pretty neat stuff. So that's just out there for you to realize that you probably want to, even if you don't use it, understand it. Especially, and as I made the point for the Atlanta audience, especially if you have friends and family members who are in vocations who might be impacted by this, and the impact is often positive, not just negative. I would argue that if I were a real estate agent in this area, I think I want to know about this. Any other thoughts, Ken?
No, you covered it nicely, Mark. It's amazing.
All right, speaking of amazing, here's our performance perspectives. I did put it back to a 10-year time horizon for most of the entries. If you see a stock name, it's because it's among our 10 most widely followed companies by us at Manifest Investing. It correlates pretty well with the Better Investing Top 100 also, but these are companies we actually follow and own. And the point that we love to make, there's a couple here, but again, the indexes that you can invest in as an individual investor, you are settling for 8 to 13%, maybe 14%. You can see how hot the S&P 500 has been over the last 10 years. And just a pretty good situation top to bottom. I will point out, Ken, and we'll certainly celebrate it tonight, that the Investing Roundtable has returned to 16.4 and 2.5, beating the market by 2.5 percentage points.
Boy, the market's been really hot since January 24. I mean, I'm very happy to see Buttonwood in a green total return, but when you're comparing that to the 20.5% that it's gone since January 2024, that's certainly a dismal relative return. We got to really keep on working with this one. All right.
Well, it is clearly, sometimes I think Mr. Market just dishes out humility. And so Ken and I have a work in progress that I hope someday it's a good story. All right.
Oh, Mark, we're getting our audience responding to your cost for ChatGPT monthly, and it's $20. So
20. Okay.
you were correct. Okay.
Yep.
Thank you to Phyllis and to Bill for that information.
Yeah, and we've put a bunch of investing related case studies together, looking at all of them. So that's why I get confused. All right, here's our Groundhog Challenge update. The numbers are more green than ever, and the monkey is down off the charts. And that's where I start losing interest because I'm not on the page yet. So Ken, go ahead.
Well, the clubs, that number of clubs in the top 40 is actually going in the wrong direction. We hit a high of 12 clubs, and we've hit that high a number of different times since the contest began, but we're down to 11 clubs right now in the top 40. We have 2 more in the next 10, but our clubs are moving down the list while we have a number of people that have really taken huge advances forward again. I'm especially looking at Mr. Matabushi, Siraram, maybe. I apologize, up one side and down the other, because I hate it when people mangle my name. But I'm just doing it phonetically, and I'm going to bet that it isn't as phonetic as I'm trying to do it. Anyway, from spot 33 to spot 14 is quite a move, and Fritz Braun has moved right back into the thick of things from 14th up to 3rd.
Yep.
So we have some pretty good movement going on right here. And it's the contest is anybody's to win yet, Mark. I mean, I think that if you're clustered anywhere in the top, maybe up to around the top 20, maybe, I think you still have a reasonable shot of ending up in the spot number 1.
Yeah, and Ken, I think it's anecdotal, but I think what I see happening here, notice that many of the celebrity ones have dropped off too, but I think the individuals are more likely to focus on smaller companies, faster growing companies. And I think when that starts improving, when the landscape there improves, I think you see the names go up and the groups kind of chase them a bit, with the exception of, take a look at 34. That's Ty Hughes and Moose Pond. And that's a chat GPT generated small company listing. Notice they went from 86th to 34th. I think that's kind of fuel for the many of the individual entries. And yours, of course, is carefully sculpted to include smaller companies.
I like to make sure that I put a groundhog in that contains all of the above types of companies. I've done that since the very beginning of the contest, and I've been successful. Not as successful as I'd like, but I've been reasonably successful in doing that.
Yeah, you came in second once. All right, and Matt,
who did I lose to?
sorry, you're breaking up.
Okay.
Both Matt and I would like to point out that we are both beating the market in the groundhog. We're just off the page. All right, here's Buttonwood, and making decent. It's finally stabilized a bit, so we will not be doing anything with this one for a couple of weeks, but the current situation is a little
more
better.
cash into the portfolio next Tuesday, because that'll be the 2nd of the month, and the cash will flow in on the 1st of the month. And you're right, 2 weeks, and we'll try to decide what we're going to spend that money on, and whether we're going to make any other changes in the portfolio.
And here's a look at our graphic. And again, we like the fact that we are seeing a little bit of success with the green and the blue lines, better than it had been anyhow. And of course, that is met with, as long as the fundamentals stay relatively constant, that means your overall return forecast is going to drop a bit. And you see it right there in black and white. Okay, red, black, and white. But we are celebrating the fact that this number used to be very, very red.
Extremely red.
And I'm going to put a smiley on there because I was getting a little worried, and even with our United Health slap around a couple weeks ago, we're still okay. All right, so we'll be back talking about that next week. Here is a quick look at some shopping I had done for the roundtable tonight. Our Sweet 16 for August, I had went looking for some companies that were relatively oversold according to their relative strength index, in combination with some of the leaders from the cash flow aristocrats screen that you see there on the right. And some pretty good companies shake down out of that. You will recall that we added to Novo in Buttonwood. Brown & Brown was a roundtable recent stock. There's just a number of companies on here that have showed up. Tom Lee added these companies down at the bottom, which I think are worth a look just to see what he might see. And anything that you see there that jumps off at you, Ken?
Well, I'm looking at the list on the right, and the highest growth number, and I've become more and more focused on growth along with PAR, not just PAR by itself. And that's Fortinet. We had somebody choose Fortinet at the panel in Atlanta, and I hear probably Fortinet's coming back to the roundtable tomorrow night, so that'll be interesting.
Well, that's tonight, Ken. So.
Oh, it's tonight. Golly, okay.
So yeah, I could see we might be running for cover on this one, because I
better put an alarm on my clock, you know.
I think whoever presents Fortinet, you know, if the other two participants happen to choose a tired old repeat selection, you know, majestic, aristocratic cash flow could be very attractive to our audience, you know, at the next roundtable.
Well, I'm going to present a tired old repeat selection that's doubled in price in the last 2 years. So
okay. All right. All right, so here's something else. We've gotten a few cards and letters, emails, basically questioning our obsession with the cash flow aristocrats, and we want to make this perfectly clear. And I never read slides, but I'm sort of going to read this one. We did not say, and we don't mean to suggest or even imagine that we're ignoring earnings completely. We're just trying to put them in proper perspective, and we're not just focusing solely on cash flow. We think the cash flow aristocrats generate a pretty good shopping list in a field of opportunity, but it is just one characteristic, but it's one of many that we sometimes neglect. And we like to look at all of the influential characteristics of companies when we do a study. And in this case, I believe, and Ken, I'm kind of sugarcoating here a little bit, earnings can be compromised by tax accounting and GAAP gymnastics. And I pay attention to those people listed there. I think all of you want to or do. And they suggest that cash flow understanding is important. And as we look at a company, I do think it can be very telling, especially for early stage investing. But I stand by the statement there that, you know, looking at the cash flow analysis for any company and blending it and balancing it with what we already do could be very helpful. And we're not even going to name the company on the right, other than to remind the audience that earnings break through. By the way, the earnings on this particular chart were down here. So this company had no PE in 2012 and 2013, but it did have a price to cash flow because price to cash flow was above zero before earnings. And the two certainly help to reconcile each other. So Ken, I'm dismounting the soapbox. Am I overreacting?
Well, I don't think you're overreacting. And Mark, investing is my hobby, but cooking is my passion. And I cook better when I have the right tools. And I would characterize cash flow as just another really nice Le Creuset pan that I could add to my collection, so that when I need a brazier, I have a brazier and don't have to use a skillet to make that happen. I also think that cash flow is a beautiful, beautiful tool when we're looking at early stage companies that don't have earnings. And that's what I've found cash flow, where I found it to be the most opportune kind of a tool to pull out of my toolbox and analyze. I also think that cash flow can move around when a company gets into the acquisition mode or into the merger mode, or that kind of flavor of what companies do sometimes. But I think that makes it easier to explain discrepancies in cash flow than it does to explain discrepancies in earnings sometimes, especially those that are covered up by accounting games and changes in laws and changes in regulation and everything else. I've been investing for a lot of years, and in the last 15 years, I've seen more fooling around with earnings than I used to be able to ferret out as I read through different reports and quarterly reports and everything else. So I agree with everything you said. And folks, it's just another tool. But the fundamentals of sales and earnings are still very important to us and will never be neglected.
Yeah, and I'm kind of curious. You were talking about using things in the kitchen, and were you speaking Elven when you were talking about them, or I mean, you were saying things
No,
that
Le Creuset is enameled cast iron, and it
all
is
right, I
by
get it.
far the best kitchen tool that exists anywhere for anything. Okay.
Yeah, there was also a recent journal article on them,
On kitchen tools?
on Le Creuset specifically.
Oh, okay. I'm a Neanderthal. I'll go back in my cave now.
Well, you don't cook, Mark. Okay.
Well, yeah, you put it in the microwave and you punch the right number.
Okay. Next slide.
What you do. All right, let's switch gears to foundational selling. We have about 15 minutes or so. I think we can probably knock this out. It's a topic that Ken has inspired, so I will let him basically take us away on this.
Well, let's look at the next slide then, Mark. Okay. I would like us to do some serious work on the roundtable portfolio, and I sent to Mark a few lists about a month ago, and I said, look at these lists, and I think that we can use some of our theories, some of our ideas, and we can weed out some of the 20% of companies that come from the rule of 5 and that we should not be investing in, and that our initial analysis, even though it was the best analysis we could possibly do at the time, failed us. And here's
I've got a timeout. I don't usually interrupt you, but keep in mind that sometimes that par is low because we've been extremely successful.
Well, I was just getting there.
Okay,
I was going to point out that this list is not made up of all terrible stocks.
Okay.
But we have learned that sometimes stocks get way ahead of themselves, and you do an SSG on 1 year and you get a 15 or 18% return, and then it takes off, goes to the races, does wonderful kinds of things, and every time it moves up 3 or 4%, the par goes down because it's eaten up a little bit of the potential that it had built in when you did the SSG. I don't have anything bad to say about Tractor Supply. I think Fabrinet is still a wonderful stock. I love Fastenal and Installed Building Products, but there are some clinkers on this list as well, and they're clinkers for a reason. I won't name them specifically, but if you go down this list, I think you'll find a couple of companies that you would never, ever, if you looked at the SSG today, you would never decide you were going to invest in. So I think we can pare down a list like this and not get rid of the whole thing just because of par, but put the par along with some of the other ideas like quality, like growth, like financial strength, put them all together and decide maybe they don't belong in our tracking portfolio. Go to the next list, Mark.
All right, so I'm just to tell the audience, Ken sent me 3 or 4 different lists, and all I did is I said, you know what, we can import those columns into the ledger where we keep track of every single selection made by the roundtable. So this is you're looking at the ledger, and I'm going to campaign for. I'm not sure we need a financial one, but we'll debate that out, Ken. Here's the next slide.
Well, the next one was quality, and I think this slide, more than any other list that I sent Mark, speaks for itself. Because I'm a firm believer in the quality ranking that Manifest has been doing for, I don't know, 15, 16 years, maybe longer than that, 20 years maybe. And if you look at the quality ranking of that I've put together here, and I just pulled in anything from the roundtable portfolio that had a quality of less than 30. And 30 was arbitrary, by the way. I had no real reason for choosing it, but it gave me a list of, 10 or 15 companies. Look at the growth that accompanies those low quality companies. And there's a dog in there that I picked, Fox Factory. Looks like I picked it twice even back in 22. So I'll admit to my misjudgment on that company. I no longer think that Bristol Myers is the jewel that it used to be. It's been having all kinds of issues with patents and with putting together the kinds of drugs that are making money. And I just think that this list, more than any other, points to a list of stocks that probably don't belong in the roundtable portfolio. And yes, I know that your darling Portillo's is up there in spot number 2. So I won't point that out as I just did.
Just trying to get muted,
there it is. There it is.
Well, and something else we've talked about, and I'm not defending Portillo specifically, but there's also a difference between a company with an increasing quality rating as a company.
Yeah, what's it gone from 15 to 19?
Okay. Or one that's going down. Now, Bristol Myers, obviously the thing I think we need to do with this is do an audit, a full study of Bristol Myers, confirm, do we really think it's a 2% growth company with a 20%? By the way, keep in mind that means that 75%, 76% of the companies amongst our 2,700 are better than Bristol Myers. That's what that means.
I think we also have a tool that we can use very quickly, Mark, to look. I think that if we go to Manifest Investing and use that tool that shows quality rankings over a longer period of time than just a point in time when we bought it, I think we can visually see what's happening with quality rating, and that'll be a tool that'll be very useful to us. We have a name for it. It's called the name's
Chronicle.
Leaving my head. The Chronicle. That's right.
Well,
so I would say, let's go and look at the Chronicle for Bristol Myers, for example. So here's Mark, and here's what we're looking at right there, and that has never been a stellar quality company. I mean, even at the height of quality for the last, maybe a 3-year period, Mark?
Well, it's going back almost 4 years now, a little over.
Okay,
4.
well, even at the height, we're looking at a 75, which doesn't even put it in the top quintile. But at this point, there's a definite downward trend to the quality in this particular company. And that we've always said for roundtable stocks, we've always said that should be something that we really want to keep an eye on. When quality is degrading, that's a problem, so I think we have some ammunition to use for a couple of these companies right there.
And now, all right, so everybody, I want you to lean your head to the left and look at this, with your head leaning left. I think no, I don't think that. Never mind.
At best, it's horizontal, Mark. Okay, come on. And it's horizontal at a really low number. All right, at best. Okay.
All right.
You're not going to convince me it's moving up, Mark. Okay.
Go ahead, Matt. Where are you going to pile on here?
No, I was going to say it's kind of like a quality dead cat bounce, I think.
Oh,
okay, Mark, you're getting it now. Okay,
I don't humor him.
Go back to that third list so that we can end at around 3 o'clock because we have roundtable tonight.
Yeah.
So
here's the third one.
And this third one was just pointing out that the roundtable, through no fault of the presenters, I don't think anybody presented a stock with a growth forecast below 5%. I don't think that's ever happened in the history of the roundtable. But there are companies whose growth has significantly slowed for one reason or another. And again, there are probably some excellent companies on this list, as well as some companies that are having serious problems. When we talked about Malibu Boats, that company was a high flyer, and it was a high flyer for a number of years. But since the pandemic, this company has had real problems in selling expensive boats to people. And there's a number of other companies that we can tell stories about that used to be one kind of growth example, and now they're not. They used to be high growth companies, and now they're just not. I don't recommend we just say wholesale, throw the whole list off the portfolio, but I do think that if we're selective and look at them, there's not really this many companies on the list because there's a lot of doubles and triples and quadruples and quintuples on the list here. But I do think that we can pare the roundtable portfolio down. The only thing that these lists are missing, and I couldn't get the data because the data is embedded into the spreadsheet. I think I would like to know what the relative return of these companies that we've put on these three lists happen to be, and that probably shouldn't be too difficult to put into a chart just like this, should it?
Oh, we could do it, but one of the things I like to do when looking at a question like this or a challenge like this is I don't really care so much where it's been or what it's done, although that is a part of it. I really want to think of the company as positioned going forward. So I mean, I would be inclined to maybe make it available, but make it hideable. I don't know. We can talk through that.
Okay, I just think the information would be useful
I
if
can do
for no other reason to celebrate what it did for us and then say it's no longer doing it. You know, that kind
Okay.
of thing. So I think this is just a beginning point for doing some of the work in the roundtable tracking portfolio that is very difficult for us to do during the roundtable itself because it takes a little bit of time.
Right.
And I don't want to take up, 3/4 of bull sessions for the next month and a half doing this, but I think that we could break this down into smaller segments and maybe visit it every other bull session or every third bull session and decide that we're going to eliminate, a half dozen or a dozen, not companies, but a half dozen or a dozen positions from the roundtable. I think we could do that.
Yep, we can do that. And on the financial strength, I'm still wrestling. I mean, for me, these are the three things we really look at up at the top: the return forecast, the quality, and the growth forecast. Financial strength is a big component of the quality ranking, but
Yep.
it
And
may
we know
maybe
it can be skewed, but we know it also can be skewed by a
right.
company that suddenly starts to grow quickly or by a company that suddenly is growing more slowly. The trend line, which basically is what this number is measuring in an indirect way, the trend line can move very quickly when there's huge gaps in what the earnings are doing. So,
Yep. So, all right, I'll keep it there for now. Probably knock it down to remove the tenths because we don't need that on there. But
yeah.
I think we
And,
should tinker with this and see where it takes
yeah,
us.
and I do think, Mark, that when we're looking at financial strength, we probably should be looking at it in cohorts rather than as individual numbers. I mean, that 15 on that list of the ones with financial strength, that last list we were looking at, that 15 kind of sticks out from the rest of them like a sore thumb,
Sure. All right. So we will continue to crank away, and I like the direction that this is heading in terms of foundational selling. All right. Quick reminder here in the last couple minutes, David Gardner's next book will be coming out September 16th. He has been confirmed as a speaker for the Chicago convention, I'm pretty sure, unless Matt's going to slap me around here. He intends to accept.
I think we hear interest. I don't think that's set.
It's not
We're
100.
definitely asking.
It's not 100%, but I know he's interested, so with pretty good chance. So he will probably be discussing Rule Breaker. And the thought was for him to give a regular speech and also offer an educational session. So let's hope he takes us up on that. Just a quick reminder that we do archive these presentations on YouTube if you want to go back and look over some of these things more carefully with your slide deck at your disposal. We'll always put the PDF of the slides we use on Manifest Investing in the forum. If you're not a Manifest subscriber, first of all, shame on you. We admonish you, but we will send you the slides if you ask for them. All right. And just real quickly, kind of a theme from Atlanta. You can't celebrate something you brought 20 years ago if you didn't buy it 20 years ago, is kind of what that comes down to. We'd had a panel session. Those were the 8 stocks selected. Notice that I did pick Fortinet, so I'm using my weekend homework tonight for Fortinet. And some of those others are fairly recent, either Buttonwood or Roundtable holdings. But we'll see how those do. And then we got kind of a kick out of this one. I'll just let you read it. It actually is a true story, Susie Artsberger. And it just kind of makes the point, I think, of what's possible with investing. Literally turned their wedding reception proceeds, or the avoided costs, into a couple $100,000 that went towards the purchase of a house 20 years later. So it's kind of neat to hear her tell that story. And then there's always this one. We did the Newsies presentation a little while back, and when we put this on the screen, Kevin was in the audience, and all you could hear from the back of the room was, "Oh God!" So Kevin was offered the opportunity, and actually he wanted to buy the McDonald's. His uncle talked him into buying an electric utility instead. And kind of fascinating that $100 in September 1969, $100 worth of McDonald's is now paying $649 a year in dividends. So as we say here, this could have been better investing. 15
My regret, Mark, is that on September 11th, 1969, that would have been at the end of my second week of ever teaching. And that would have been about the time that my superintendent walked in and told me he was taking $10 from my paycheck to put into my 403B, which I had no knowledge of any kind. I only wish that instead of starting a 403B, I had just said, no, I'm going to keep the $10 and I'm going to buy McDonald's stock instead. I would be much, I can keep going on the muches, wealthier if I had done that. My 403B over 35 years of teaching returned about 2% to me on an annualized basis. So,
but it was guaranteed though.
Yeah,
but you're right, Matt. It was guaranteed, and it was, quote, safe, unquote. All right.
Anyhow, that is our screenshot for today. I mean, the 15-cent hamburgers and that over 1 million served. I mean, those are some pretty special slides. And by the way, that particular McDonald's is one of the first in the country, and it's only a couple blocks from where Kevin grew up. So he could actually walk there and order a 15-cent hamburger back in the day. Good time. All right, anything in the hopper, anything else you guys have that we need to talk about?
We've kept up with the questions, and I
think there's one good basic one I wouldn't want to leave, and particularly for those who aren't.
Robin's question. Yeah, go on, Matt.
So Robin, and I'll say I know part of this, but Robin asked, is the Sweet 16 a published dashboard? So we went by it pretty quickly, but if you can just describe what the Sweet 16 is and what its siblings are, maybe.
Yeah, all the Sweet 16 is a screening result that we put out roughly monthly, not every month, but roughly monthly. And what we do is demonstrate the various number of screening techniques to generate a list of potential study opportunities. So that's what you see here. We basically, and at the in the Manifest forum, I'll go there real quickly here. If you actually click through it on the Manifest website, let me jump back to here. I think we can actually see it. It was a featured article. Yeah, here we go. Well, that's the Sweet 16 from last month, I think. Anyhow, clicking through on the feature, we actually walk through a number of different screens. I did more this month. Let me see if I can grab it another way here. So we basically put it here, the Sweet 16 in the weekly update that we put out every week, every Monday. Here is that list of companies along with a little bit of narrative. And of course, we are talking about the cash flow aristocrats as a place to go shopping for study opportunities. But then you can see down here, I had gone and looked at stocks that might be beaten up quite a bit. Notice, Ken, that Portillo's is in here as being beaten up quite a bit.
Yes, that's true.
And it is a true statement. And then here's a quick screen at Value Line, a quick screen at Morningstar. Again, we're just looking for ideas to study. That's all we're doing. And then this list is compiled roughly monthly. You can always find the current version in the weekly update. And I'll show you one more time where that came from our homepage. The expected returns for the week. You see, we're telling the Georgia volunteers, thank you. They were very hospitable, very kind, and we really enjoyed ourselves down there. And yes, Ken and I were fueled by a Buc-ee's brisket magic. There you go, Matt. And if you click into the weekly update, again, you see that picture that we show here every week. But then if you go down, you can actually look at the Sweet 16. Thanks for the question, Robin. Thank you, Matt. And with that, I need to get to work on finishing up. We are headed up in the right direction, so we will be celebrating a little bit tonight. Bring your own beverages.
I want to remind you, folks, that the roundtable begins at 7 o'clock Eastern time tonight. That's our new time, and the reaction to our new time has been extremely positive, especially from folks that live in the Eastern time zone and the Central time zone. So we're happy that our audience actually grew by running it a little bit earlier, and we'll look to see as many of you as can possibly make it at 7 o'clock. If you don't have a way to get to the roundtable tonight and you're a Manifest subscriber, go to the events tab on Manifest. Mark, scroll up this page and show them where the events tab is.
You can find it in two places. We'll often put it over here on the upcoming events. This would be a link directly to the registration for the roundtable. And under events, you see that we will have registrations for upcoming events and sometimes links to other events. You can see Betsy gave a presentation for the Arizona chapter right there. That's probably available at either the Arizona or Rocky Mountain chapter websites for better investing.
And membership is not required to attend.
Right, and you can get to that event page, that event URL, which is just manifestinvesting.com/events. That's a public page. You do not have to be a subscriber. All right. So with that, I'm going to say we're done here. Our work is done here, Ken.
Absolutely. We hope we see most of you this evening. Good afternoon for now.
Take care, everybody.